Al. Welcome to Adulting with Autism.
Oh, thank you, April. Great being here.
Okay, so for all my audience that's new to you, who are you and what do you do?
Well, my name is Al Zdenek. I'm the executive chair of a fintech company called K Club Inc., which is the creator of the K Club app, and it's a personal finance app for people to make better financial decisions, get better control and clarity around their finances. I'm also executive chair of Tyrus Pictures. It's a film production company that I started about a year ago, and we look for and produce feature films. But a lot of my work and concentration right now is around K Club and helping people with their personal finances.
So, a lot of my listeners are young adults and feel like money is the source of either shame or chaos. What do you want them to know up front about what is not their fault when it comes to money?
Well, for one thing, when it comes to money, and you feel that way, don't worry, you're not alone. There's almost everyone has those feelings. They don't feel like they're adequate enough. They can make decisions enough. They're ashamed around it. They're stressed around it. They don't like people like money. They just don't like dealing with it and having to make financial decisions. So, don't worry, you're not alone out there. And so, there's a lot of things on website with stories and all that that people share that will have the same feelings you have. It'll resonate with you, and I suggest people spend time trying to search those out.
So, for people who hear wealth management and automatically think, I used to think this way, it was just for rich people. How do you define wealth that feels relevant to somebody who's everyday?
Well, wealth is just a word. Keep in mind that wealth to one person can mean completely different wealth to another. Wealth to a lot of people mean that their health, they're happy, and they have enough money to live the lifestyle that they want. Wealth to an Elon Musk is another stratosphere. So uh, I wouldn't get caught on the word wealth. Just keep in mind that money and wealth is a tool, and you should really strive to see what level of wealth and or money you want or need, and be satisfied with it. I will say that early in my career, because I come from a poor background, is that I wanted to be rich, and I just worked day and night, and I didn't care about people, and I just wanted to do wealthy, and it really hurts you because you start making stupid decisions, or else it's not fun. It's not fun to get up every day and be unsatisfied and either envious or always looking at what else someone has. So I think the best thing is to do is start thinking about, what does wealth mean to you? And how much money do you need to live the lifestyle that you'd like to? Uh, is your health okay, or personal relationships with family and friends okay? That's all part of wealth to me.
So, what are some financial mistakes you see like people make over and over again? Not because they're like irresponsible, but the system is confusing.
Well, I mean, I see a few things. I see when people first go out in the world, like new Gen Zers, and they're getting their first job. It's the first time they're getting money, real money in, and they never had that before. So mistakes I normally see them make is they start to buy things they can't afford. They run up their credit card bills. They buy expensive car they can't afford or something like that, and it comes back to haunt them. And so, I mean, now I've dealt with a lot of Gen Z people to get them out of that, and there are ways to get out of it and gain control of your finances. But some people, I've had clients or friends that do this over and over again. They finally get themselves okay, but then either, and again, maybe not fault of their own, either a health issue comes up, a family issue, a child issue, and they have to again go out and make use their credit cards or get other debts. And so I mean, that's what I see. Now, I also see people make mistakes around debt. And when I say that, I'm not. There's good debt and bad debt. Bad debt is credit cards or consumer debt. You're just spending money to fund your lifestyle. But people also, people that eventually, let's say, have a mortgage on a house or a car loan, they feel that paying this stuff off quicker, like an extra mortgage payment a month or a few $100s a month, is the wisest thing to do. And I try to show them that most of the time that's not. If you're going to decide to pay off good debt early, right? And again, we don't have enough time in this program to go through a lot of stuff, but you actually pay more income taxes because when you're paying on principal, that's not a tax deduction. You're paying tax on that money. And two, a lot of people will do that and not have like an emergency fund or other kinds of money put away. So in case there's an emergency, and if you pay off your house quicker and you don't have emergency funds and you lose your job, well, I mean, there's nothing to fall back on, but you still got to pay the mortgage and taxes and pay the utilities. And so I see sometimes that they're in such a hurry to pay off debt that they really leave themselves vulnerable by not having cash reserves or something put away. So I caution people on that all the time. Another thing I see with people, whether you're Gen Z, Gen X, millennials, is that especially in today's society, we tend to get these subscriptions or services or other things, and sometimes again, when you have the money, you start saying, "Oh, gee, I want an extra channel, I want an extra package, I want this," and all of a sudden they're spending quite a lot per month on this, and or else there's other offers they take on subscriptions every month or something, and after a while they don't use them, but they're still paying for them. And it's because they don't check their credit card statements or their bank statements. So uh, in fact, I just did this myself the other day. I went through my credit card statements just to see if there's subscriptions I wasn't using or I was getting charges that I didn't know. And I actually found an Apple bill that I had no idea what it was. And it was only like $15, $20, but that's 180, $240 a year. That adds up after a while. And, I don't like to throw $240 out the window. So I think that people make mistakes in that too. And, um, and I think the reason they do that is because they're afraid to look at their bank statements sometimes, their credit card statements, because again, we don't like to get bad news or we feel maybe ashamed we're spending the money. There's all kinds of emotional issues around that.
So, what would you recommend them do when they're first starting out and they're trying to manage money?
Well, the first thing I would do is, your first paycheck goes in the bank. All right. For one thing, I would make sure I did not have any more than one, at least no more than one, and no more than two, but at least one credit card. And then I would make sure, let's say your limit on the credit card is $500 or 1,000. I would make sure that you use this minimally and that you're able to pay off that balance every month and not carry a balance. That's one. Two, I would make sure I would look at what my expenses were, and hopefully my paycheck is covering all that. Like I would look at what came in at the beginning of the month, what's there at the end. Hopefully it's positive. If it's positive, then that's great. Then maybe we have room to maybe save a little. If it's not positive, then you have to go back on what your expenses are and maybe do something about that. Another thing I would do is I would start to have what I call an emergency fund. So what is that? Um, it's really to have a month or 2 months, 3 months of your expenses that you have saved up. That in case you get ill, you lose your job, something you have reserves to fall back on. So before you save in anything else, save for emergency fund. Now, once you do that, especially if you are working for an employer and they have a savings plan like a 401k, I try to save some of that. Now, again, be careful. You don't want to get to a point where you're stressed and you have no money, but maybe start off with $50 a paycheck, $100 a paycheck, whatever you think you can afford, because most 401ks, the employer matches what you do, and that's free money. If you put in $50 and they match you 50. You know, what better deal is there than that? Plus, it's a tax deduction, and that means you pay less taxes on it. So it's a way to start building up some reserves or wealth immediately. Um, those are some of the first things that I would do.
So I know a lot of autistic and ADHD adults are drawn to freelancing or starting their own businesses because regular jobs don't fit. Like, what cash flow basics do you wish every new like solo worker understood from day one? That's not go to the bank and get a really huge loan.
Well, especially since you're self-employed, and I was originally self-employed. And by the way, I did not do this. I learned later through making some mistakes. This, but most self-employed, they all they do is look at how much money they have in their checkbook, and they think they're fine. But they don't realize in running a business, just like personal life, bills are higher some month, lower in others. So if you're not watching it carefully, you can get yourself in a cash crunch. So if you're self-employed, what I would do is again look at what's coming in and look at the bills you have. Look at what you must pay, what are discretionary, that if I want to pay that, maybe have some much for fun, and then have some that you're saving. Now, a good rule of thumb is whatever you have coming in, if you can afford it, try to save a few percent of it. So if you have 1,000 coming in, it'd be nice to save a few hundred. Um, so so that's what I would do. But I would also do something else that's different than if you're not self-employed. I would take a spreadsheet, like an Excel spreadsheet, and I look forward a whole year. And if that's too much for you, at least 3 months or 6 months, and try to forecast what's coming in, because that's always when you're self-employed, what's coming in cash is always the most difficult thing because some months can be higher or lower. But the one thing you do know is what your expenses are. So you may have your rent, you may have electricity, you may have other things that you must pay. Then you know what your normal food bills are. So what you do is you list those out and spread them out because let's say you have a bill coming up in the future, like you have to pay something around um, like your car repair or something, or you know your car is going to need a new something in the future. You want to be able to put this into the spreadsheet so you see what money's coming in and what you need. But one of the last thing to put in that spreadsheet is put in also as a cost how much you'd like to save for that emergency fund or for savings. All right. So the difference between the self-employed is that um, you don't have this normal paycheck that's the same coming in. The paychecks could be different. So try to forecast more 3, 6 year out so that you don't get yourself into trouble or that you start looking at how to manage your cash flow.
How can a young entrepreneur like separate their personal and business money in a simple, like realistic way? Because I know when you're starting a business, a lot of people are already employed at their job and but trying to transition into being self-employed. And it gets real mucky in the middle.
Mm. Well, one good thing to do, or one idea, is to have two checking accounts. One for your personal, that where you pay your personal bills and your personal check from work comes in, and then another, which is a business account at your local bank, which again you have the income come in there and what those expenses are there too. And even though sometimes you may from your personal account have to fund some expenses to the business, you're able to see what money's coming in for that. And if you have it that way, by the way, what's nice about that is when you're doing your taxes at the end of the year, you know all the things you have in this business account are deductible or income, and you don't have to spend time going through this one account for personal business and try to see which is which. So I think the simplest way is doing that. And if you can get an accounting software like a QuickBooks to have your personal and business, which is actually what I do, quite frankly. I have QuickBooks and I have my I have my personal and business, and I'm able to segregate and see what's going on in each account.
So, with your Cake Club app, for somebody like me that absolutely hates spreadsheets because I just go wrong, what does the app actually help me do?
Well, keep in mind the K Club app, and by the way, just not us. There's other budgeting apps out there. You know, the one thing you're right. People hate budgets for one thing, but I don't call them budgets. By the way, I call them your spending plan because you get to decide what you're going to spend on. So you can put together how you want to spend your money rather than a budget, which is oof, I'm being
Yeah.
forced to do this, you know, and it's time consuming, which is what you're talking about. But the nice thing about today's electronics and apps is that you can look like, for example, the K Club app. You can put in your two checking accounts, or you can put in your one checking account, whatever one you have, and you can put in and we have your spending plan. You can even have a simple one or a more detailed one. And as you're going through, and by the way, if you put in your credit cards also, as you spend money real time, like you're at the store and you spend something in your credit card or whatever, it'll flow right through to your app and it'll go into the category you want. So all you have to do is look at it during the month and see what I've spent total and by 4 or 5 categories at the end of the month. So you're right. I mean, no one likes to put together spreadsheets except maybe accountants and some engineers, but well, maybe, but most of us don't, and I don't like it either. So that's what I do. I have it electronically just flow through to my spreadsheet or app, and it's easy. I think the biggest thing when people have this, the biggest win is that they see if they've been charged twice for something. They see that, oh my god, I didn't realize I still have that service. They
Oh,
start they start to see, and you can tell. I mean, quite frankly, again, I just told you, and I'm experienced. I just found out I was being charged at 10, $20 a month. You know, and to me, I felt good. I just found I just found $200. And and what it does also for you too, and it's really funny because I was speaking to a friend and I was helping him, and I noticed that he had this streaming service. Again, it was only like $18 a month, $22 a month. But I said, "Do you know you have that?" He said, "No," because it was disguised as like in the Apple bill. There's an Apple charge, and he
yeah.
thought it was like for storage or something. No, it was for another streaming service. So the thing is, when you have charges, uh, to look at them. And by the way, it's not like you have to spend hours on this a month. What I would do if you just take one time per month, because now if you set up the app, which might take 15, 20 minutes, and then every month or twice a month, but at least every month, go in and look at what happened during the month, what came in, what went out, and what was I charged? Just the detail, and just make sure that you know what you're being charged for. But that's one thing that I showed him. That was a big win. I think I equate looking at your finances like, let's say you want to you want to bowl well. You go to a bowling alley, right? You want to bowl well. Well, if you only bowl once a year, you're probably not going to bowl very well. If you bowl once a month, it might be better. But let's say you join a league and you bowl every like once or twice a week, right? You get really good at it. And if you stop, you're not going to stay. You're not going to keep your skills. So it's the same thing with money. Try to like spend one day about 10, 20, 15 minutes on it, and or if you can sooner. And you know what? You get better at it. You start saying, "Oh, gee," you start looking at your account, your reports, and it becomes easier. You become better at it. So that's what I would suggest.
So, what if someone feels like they've already messed up and they're like in debt or we got zero savings? How can they slowly kind of build themselves back up? Because I know there's some people out there that have gotten themselves in quite a bit of debt.
You're speaking to the poster child of that. When I first was out in the world, was aggressive. I got into real estate. I did this and that. and I almost went under. I almost declared bankruptcy. I ran money. I had a lot of negative cash flow. And so I tell you, and it's lonely. It's you're ashamed. You know you screwed up. It's lonely. You don't know what to do. And I also was raised in a house where you didn't ask for help, because if you ask for help, that's weakness. So you have to suck it up and do it yourself. And I found out, for one thing, you ask for help. So when I was having problems, I was desperate. I asked someone for help, and what he did, especially with my debt, and again, when I'm talking to people who have like a lot of credit card debt, right? And they and it's overwhelming. Is he showed me how you can negotiate with the credit card companies to where you could pay less per month. You have an interest holiday. Um, and most credit cards will resist this, by the way. They're not gonna be really, like, happy. But what you do is you basically, you can go to extremes with them, you can stop paying them, and then they call you up, and then you can negotiate better with them. And if you're not a good negotiator, there are attorneys or firms out there that you can hire to represent you to negotiate with them. But there are times too that where a person, what they have is so overwhelming that what I suggest to them that they may want to do, it's up to them. But you can also declare personal bankruptcy to clear up your credit card debt. It is the most uh, how do I say, extreme thing to do. But quite frankly, I had a good friend, and she had she had almost $100,000 in credit card debt, and her income was not a lot. She couldn't pay it. And so she tried to negotiate with them, but even negotiating, she was in over her head. There was no way, even with her income, she was going to be able to work this out. So she basically went to a workout attorney, and she declared bankruptcy, and it cleared up her whole credit card debt. And you might think that, gee, oh my God, now I can't get a credit card or a loan. No, you'd find out that within a few months, 6 months, there are companies that will give you small lines of credit, like $500, 1,000, and you can slowly work your way out of it. And today she is fine. So the thing is, one thing is to ask for help. I would ask a person. We all know people maybe that you think, gee, I see Tyrone there. He seems to have his act together. Let me see how would he handle this. You know, again, you have to like put aside maybe the shame of it, because it's not a shame. Everyone has problems. Everyone has had a challenge in their life on this. But so you ask him, maybe Tyrone had, give you some idea, or you say, look, who do you know that can help me here? And you start asking for help. What I would do too, there's probably chat rooms on personal finance sites that you can just type in and say, "Look, I have problems." I know that there's some planners like Ramsey and Ormond. They have like call-in shows. Um, Again, you go to a successful business person in your area and say, "Look, I'm having problems. Would you help me?" Most people, I would tell you, 99%, when you ask a person for help, they want to help. Okay, because they normally have been there, especially if they're older. They normally have been there. So I would ask for help. I would make sure that you start taking. The one thing you don't do is ignore it, because it doesn't go away, and all it keeps on doing is causing stress and anxiety. Be in action, get help. There's going to be help out there for you. That's what I did, and I was fortunate to find good people to help me get out of my situation.
So, what does financial freedom mean to you beyond just like money in the bank?
Again, financial freedom is different for every person. To me, financial freedom is the ability someday to have whatever choices I want. Like, for example, if I want to go to work today, I don't have to. Being financially free is like, if I don't want to go to work, I don't have to. If I don't want to deal with people that I don't like, I don't have to do that. If I want to take a risk, like I have enough money or whatever, if I want to take a risk, a small risk, like buy a special stock, maybe open up a business or do something else with my life, you know, do something else with my life, or just volunteer, that I can do that. So to me, it's like being able to do what you want. And there's different levels to that. So I dealt with people that, quite frankly, if they're making 50 to 75,000 or less, they're happy. They can live the life they want. There's people I know that need a half a million or more. Everyone has a different threshold or a different goal or a different amount in their that's needed in their mind. So, and I quite frankly, I think that's where a person should start is like, how do I want to live? Even if you're not living that way today, how do I want to live? You see, if you let's say you're making, it's really funny. I have a Gen Zer who is 23 years old, and he has to have help from his parents to afford his apartment, and he shares an apartment. But he has, and his goal, his short-term goal, is to be able to earn enough to basically not have to ask his parents for help. So that's his first step in some freedom, right? And so I was dealing with him, and I said, okay, well, how much money you have coming in now? He knew that. How much do you need? And he saw that it was more. I forget what that was, a couple thousand a month more. I said, okay, what's the first time you do? Maybe go speak to your employer. I'd say, look, I'm earning this now, and I've been here for a while. How do you see my future here? Now, again, you're taking a risk. Maybe some employers won't like that, but maybe you have a boss that'll say, you say, look, I enjoy working here. I'm not leaving. I just want to know what my future is here because there's things I want to be able to afford. And he found out that they were to give him a raise and whatever. It still wasn't enough. But now he could say, gee, I'm close. And now maybe I have to have a side gig. Maybe I have to drive a taxi. Maybe I have to become a part-time real estate agent. Maybe, and since he was in computers, maybe I can help other businesses set up their websites or something. There's always these side gigs out there. But see, it all begins with how much are you making now and how much do you need? And then what do you want? How do you want to live? Now, when I was about 30, in my early 30s, that's when I almost went bankrupt. I was really fortunate that I found a person in Dallas, Texas. He's a CPA planner, um, and he basically showed me how that how to make better financial decisions. And he showed me some basic financial rules that I was never taught this in high school or college. Or I was never taught this. And I was able to see that someday I could be able to live a certain lifestyle. And I remember thinking to myself, I want to be financially free by 50. And I was in my early 30s. And I got there by 48 because what I did, I knew where I was, I knew what I needed, and I kept on pivoting. I kept on trying to get what I needed till I finally made it. By the way, if you're dealing with entrepreneurs, the one thing for all entrepreneurs and people, but especially entrepreneurs to learn is to learn how to pivot. You have a business. It's going okay, but maybe it's not going great. So you pivot. You do a little something different, a little thing different. Maybe you have to change it, but you keep on pivoting. In fact, Jeff Bezos, who's the founder of Amazon, he said that Amazon is the result of a million experiments, a million pivots. They kept on trying things. It didn't work. They wanted this. They want it this way. And and I learned that also as an entrepreneur is that's how I eventually had the money and learn and earn the money so that I could be financially free because I wasn't on the track to do it this way. So I tried other things. I eventually tried the thing that really worked for me.
Okay, my final question is where can people find you if they have more questions? If they listen, they're all gonna have all the questions.
Okay, well, for one thing, if anyone is on LinkedIn, you can find me on LinkedIn at Albert J. Zdenek. Um, you can go to the K Club app website, kclubapp.com, and there's icons there that if you hit them, you can ask Al whatever question you want. And based on my books, I've written a couple books, and I have a lot of articles. I'll ask you just like I would a person. Uh, you can also go on at Amazon, and you'll find that I have a couple books. One is Master Your Cash Flow, how to the key to grow and retain wealth. Actually, I'm coming out with a new book in about 3 or 4 weeks that's called a Master Cash Flow, Let Them Eat Cake and Grow Wealth Too. And by the way, there's a basic financial principles in these books. what else can you do? Uh, you can go to my personal website, al@alzdenek.com, if you want there. But there's always to find me, and I'd be more than happy if people had questions to help them as much as I can.
Oh, thank you so much for coming onto my podcast.
April, you've asked really great questions, and I see that you're actually out to help and make a difference in people's lives, and I love that. So, thank you for having me on to help you accomplish your mission too.